Hello, everyone. Good morning. It's another beautiful, chilly day here in the Midwest. Spring has sprung. We're waiting for it to get a little bit warmer. It's still pretty frosty out here this morning. This is the morning market report for Tuesday, April 21st, 2026. My name is Joseph Lackland, and we will be going through some Iran war news updates with some energy index and metals analysis for the day. We'll also recap the overnight trading action in the futures. I have pulled some stories once again using Google's Gemini. And the reason I like to use Google's Gemini is that Google's a pretty good aggregator of various sources. So what I'll do is I will give Gemini a prompt to pull some news stories, and the prompt that I gave it this morning was, let's collect around 15 samples of news stories from last night until now about the Iran war, Trump updates, and energy market impact. Timestamp them and cite sources, put them in chronological order, write me a text file to give the GPT to confirm. And then what I'll do is I will take the output from Gemini and I will give it to GPT. And then what I'll have GPT do is I will have GPT scrape the web for confirmation and corroboration of stories. So the prompt is go through, start with item 6, check my story. And I'll give it the Gemini output, and then it tells me checking item 6 against current reporting, and then it'll give me an analysis of that discovery. And it says for item 6, that is too strong and likely inaccurate as written. Axios reported that Vance would lead a U.S. delegation for another round of talks. The news headline was that J.D. Vance leaves for Pakistan. But it also said that it was unclear when Vance would leave Washington. Axios' piece was updated April 19th, not clearly pegged to April 20th, right? So anything that you find out there, you must do your due diligence to see if that's actually the case or what transpired. And these large language models can definitely help you with that. It's no guarantee that there's a lot of misinformation and, corrected information out there. We're constantly being inundated with these news headlines and stories about what's happening, but once again it is very difficult to tell what's actually happening here. So that's why we're using some of these tools to try and figure it out. Reuters then reported on April 20th that Vance was still in the United States and had not yet departed for Pakistan, according to sources familiar with the matter. Reuters also said that the delegation planned to travel soon, which means a departure confirmed. Line for that timestamp does not hold up. Okay, so there's a couple of things that are out there right now, and I'm already seeing some discrepancies with the stories. So now we're going to go through the rest of the items. I had 15 examples to work with, so we're just going to briefly go through the overnight developments and attempt to find out which ones are credible and which ones are shaky. We're looking for a few credible points that will capture the overall mood of what's going on here versus trying to follow all the details all at once and getting lost in the shuffle. Item 7, Trump's Federal Reserve nominee Kevin Worsh prepares for a Senate hearing. GPT says needs confirmation, likely overstated. Kevin Worsh is a real former Fed governor and has been floated in policy discussions, but there is no widely confirmed reporting tying Worsh plus active nomination fix. Reports indicate Kevin Worsh is being considered in Fed policy discussions and inflation concerns tied to the Iran conflict. Item 8, Iran undecided on Islamabad talks. Bakei quote, verdict solid. Ismail Bakei has issued statements along these lines. Bad faith plus hesitation to attend talks is consistent with multiple international reports. Iran signaled hesitation about attending. Well, of course they signaled hesitation about attending. They don't trust the United States at all. I don't trust the United States at all. It doesn't seem like we can make very good decisions lately. That's neither here nor there. Item number 9, oil closes sharply higher. WTI plus 5%, Brent 6.9%. We're going to look at the futures here in a second. We'll see what's actually going on there. Verdict, direction correct, precision questionable. Oil did spike on escalation fears in the beginning of the week. Exact percentages, 5, 6%, 6.9% are too specific. We'll get the exact percentages later. Fix, oil posted its strongest daily gain in weeks, with both ATI and Brent surging sharply on Hormuz closure fears. The volatility in here is unprecedented. Item number 10, U.S. naval blockade remains regardless of talks. Verdict needs softer wording. Maximum pressure posture from Donald Trump is consistent, but will remain regardless of talks is too definitive, right? So we're supposedly doing a ceasefire and we're supposedly in talks to de-escalate the conflict, but the naval blockade remains. I view the naval blockade as the indicator of our intention over there. So basically, as long as the naval blockade is in place, it's a war. It's an absolute war. Item number 11, Brent slips 1% in Asia on hope for talks. Verdict solid. This is textbook market behavior. Spike, retrace on diplomacy hopes. This is the typical cycle of what we're involved in right here. The war is getting worse. Oil goes up. Risk assets go down. The war is getting better. Risk assets fly higher. Crude gets crushed. And we just keep repeating the cycle over and over and over again right now. I think we're 40, 45 days into the war. We've done this multiple times now. Item number 12, IMO warning, 20,000 seafarers, 2,000 ships impacted. This is probably very real. Numbers, exact numbers do need verification. Absolutely issues warnings like this. Fix, the IMO warned that tens of thousands of seafarers and thousands of vessels have been disrupted. There is a ton of people and ships out there that cannot get around. That is an absolute fact, that there is a bunch of traffic there that is not moving at all. Ghalibaf rejects negotiations under threat. Verdict solid. Mohammed Bagher Ghalibaf has consistently used this exact rhetoric. This fits perfectly with Iran's negotiating stance. There's not going to be too much negotiation as we apparently continue to attack targets over there, and we continue to strengthen our grip or our influence on the ports to disrupt shipping. And this not only disrupts shipping from to and from Iran, it also disrupts global shipping. So that this actually affects everybody, not just Iran. Item 14, $110 Brent if disruption lasts 30 days. Verdict plausible but needs attribution caution. Citigroup frequently publishes scenario forecasts like this, 110. 110 is nothing. Spot prices were trading 150, as high as 150 not too long ago. Pakistan security ready, possible Wednesday talks. Verdict solid. Islamabad as a negotiation site is consistent across reporting. Security preparations complete. Conditional on Iranian arrival is very standard Reuters framing. No change needed. And that will sum up the news stories. Okay, so to recap, we have more of the same. We have delegates and big figureheads supposedly going over there to try and sort it out. We have Pakistan mediating the matter with a few others. The naval blockade is in place. The stock market is in record territory. Crude oil is floating around, a little less than $90 a barrel. It is probably the greatest crisis unfolding that we have had in a very long time. And I will explain why. Because if you look around this neighborhood, people are walking their dogs, they're getting coffee, they're, driving their cars 20, 25 miles an hour around the neighborhood. They're saying hello to their neighbors. Things are in a pretty, good state. People are in a good mood. The Gasoline over here at the corner is about 4.40. It is much higher in other parts of the world, and other parts of the world are already on energy restrictions. Here in America, we are somewhat insulated from the immediate impact of what's happening out here, but we will definitely start to feel the impact as more disruptions continue to take place, and the traffic is continuing to be halted. As of right now, there is millions of barrels of crude oil that are not getting through. They're not being processed. Wells are being capped and shut down. It takes weeks for these installations to start back up. Starting them back up is not as easy as just, everybody coming back to work and flipping on a switch. There's multiple preparations that need to be made with, groundwater channeling and just clearance of pipelines, and just there's a whole host of things that have been completely interrupted here that will take days, if not weeks, to restart, not to mention all the damage that's been caused from the missiles and bombs hitting the refineries and surrounding areas, destroying all the structures, and of course, putting lots of people at risk of harm or death. This is not good. So if the gasoline were to go to, let's say $6, $7, $8 a gallon out here, right? That is going to be quite a crunch for the average consumer. The more well-off people are not going to feel it that much. The average everyday people that live paycheck to paycheck, and there's about 60 or 70% of them here in America, that they're going to be greatly affected by this. Also, the prices of everything, as I'm sure you're aware, have surged. The grocery store is completely out of control. I have tracked several, basic items that I buy over the last year or two, and everything is more dramatically expensive. Coffee at the corner here used to cost about $3 and change. It's now, anywhere from $4.50 to $5.50 for a regular coffee. Nothing fancy. Just a regular coffee, maybe a half calf or a dark roast or whatever it is, it's like $5, right? So $3 to $5, that's, an automatic, 50%, 60% increase in the price of coffee. And then, of course, you have, surrounding things like, there's prices of ground beef and eggs, and prices of, fruits and vegetables, and, all that stuff has gone, way up. And the quality of food, is not the greatest here to begin with in America, but it's getting worse, and you're getting less of it for, a much higher price. So these things will definitely start to affect us. And if there is a major problem where there's no electricity or there's no gasoline available at any price because of the disruptions, now you're looking at a much different scenario. So the threat of things getting a lot worse as this goes on, the probability that things are going to get much worse as things go on, and they don't have to go on for too much longer. They can only go on for a little while like this before we see some, more major impacts. And like I said, we're insulated here from some of the effects, but we will not remain insulated for very long. Let's look at the record stock market on the all-time high. Here is the S&P. We have an 800-point rally that began basically at the beginning of the month. So we're about 3 weeks into this. The market has gone basically straight up. I was touching on this yesterday. This is historic. It took several months for the market to move this much before. Now we just covered this in about 3 weeks. So we're back at 71.60. We closed the gap that we were in. We started the week off with the gap opening lower. I talked about this. It's the island reversal. Within a few hours, we managed to get out of the gap. We closed the gap yesterday, and now we're trading above yesterday's high, 71.60. Volatility is coming out of the market. It's not as volatile as it was. Here's the volatility indicator. We were really volatile on Friday at the upper end of the range, and we have since calmed down. The lower end of the range here on the bars is about 3 handles, 4 handles. So the market is not really moving a lot. This is a solid, hard market, which means it's bid, it's thick. There's lots of liquidity in here. People are very confident that this tremendous problem that we have is really not as bad as you might think, when it is every bit as bad as you might think, and the market is once again in la la land, hoping that things work out and is pricing in perfection. We have a similar story in NASDAQ. NASDAQ is on the all-time high, 26,855. It's on a 3,800 point rally since the beginning of the month. It has a similar pattern that the ES does. We have the gap opening lower, the island reversal. We had a retest into the gap yesterday. That was bought up pretty quick. We got a little overdone here, straight down to the opening price, almost hit the S1, ricocheted immediately, and nothing happened for the rest of the day. So what we have right now is we have the market trading above yesterday's high. The opening range of Globex is the low, and we have hit the first objective here, the R1, and we're coming off. Once again, volatility is pretty low here in NASDAQ. There's not a whole lot of activity. You can see here from the volatility indicator that we are bouncing around in the lower distribution of values over the last 3 or 4 days at 26 points every 10-15 minutes. So that's nothing in NASDAQ. The market activity is basically dead. So the stock market's on an all-time high. Oil prices are sub 90. It looks like everything is going to be fine. I don't think everything's going to be fine. I wish it were true that everything was going to be fine. I really do. But I don't think that's the case. It doesn't seem realistic. They don't seem to be able to figure it out, and they're not going to be able to figure it out anytime soon. Let's look at the price of crude oil over the last couple of months. Here we have the giant, war surge. We're in conflict with Iran officially right here. It's the gap. The market runs, hits the high right away, 115 about, gets crushed immediately from running so hard, and then we ran back up there over the last couple of weeks, and now we've come off pretty substantially. However, we still have not closed below this big up candle here around the 5th. We did briefly violate its low, but this candle is still intact. We retraced to about the median here. This is a Bollinger Band standard 2 and 20. It's a 20 period simple moving average with some Bollinger Bands just to show deviation. And we have touched the Bollinger here around 80. And it looks like we are definitely consolidating here, and people are unwilling to sell crude at the moment below 87. Now, another news headline could come out with more ceasefire rhetoric and put more pressure on the market, whether it's true or not, and that would influence the price. But as far as right now, the market is pricing in $87.20 as about the fair price of crude. However, it was trading as high as 150 not so long ago. The spot price was trading 150 if you actually needed the crude. Gasoline is a much different story. We're going to look at gasoline here. So this gap in this chart, ignore this. This is a bad data artifact. I'm going to reload the historical data and see if I can get rid of that artifact here. And basically what I'm trying to say is that gasoline chart, the way it looks over the last 20, 30 trading days, that is not bearish. That is a box. I would call it a Darvis box. And Darvis was an old school stock trader, and he had a box range trading strategy that usually worked well in up markets. Here we go. All right, so we got the right data. There was some bad data there. Now, if we wanted to draw a box here, we're going to simply draw, where is my rectangle? Okay, so we're going to draw a box from this low to this high, and draw a little box right here. So this is the range. This has been the last range since about March 20th. We've been inside this trading range. We're holding this trading range, and we're not really trading below the 280. So 280 seems to be the floor. The market had a very strong rally. We pushed down to about this level. We went up. We couldn't get through the high. We came back down. We didn't quite touch it. Now we're at the bottom of the deviation, and now we're dead smack in the middle of the range, and we're consolidating. So this gasoline is not bearish. This is not a bearish pattern. It might not be bullish, but it is definitely not bearish. This gasoline is not going down right now. It's going to take more miracles, magic tricks, and media maneuvers to get this price of gasoline lower, because you have an actual supply problem, you have conflict, and the war itself consumes lots of energy and gasoline, right? So that there's not going to be a great abundant supply for the rest of us to work with here if this continues. This is going to continue to go up. Now, once it clears 330, it's anybody's guess as to where it could actually go. We'll look at the all-time high for gasoline. Let's quick ask our agent here, what is the all-time high in gasoline prices? And we'll check this story, but just real quick, let's see if we could find something. The U.S. all-time high gasoline price, national average, depends on how you define it. Record about $5.02 a gallon, date June 14, 2022. So in the Ukraine-Russia development, gasoline hit the high of about $5 a gallon. Before 2022, around $4.11. Where we are right now, $3.80, $4 range, still below the 2022 peak. So the RBOB futures contract is at about $3.30. The actual price at the pump is about $3.80, $4 on average. It is much higher in California and other places right now, but here in the Midwest and most places, it's still elevated, but it's not nearly as bad. Quick takeaway, absolute record $5, crisis threshold psychologically 4, current regime elevated but not extreme yet. Okay, so we're not too far away. We're at 304 here in the RBOB with crude at 87. We're definitely watching this gasoline contract very closely. Let's look at the yellow metal, the rock. Gold is under some pressure. The opening is the high. We broke through the Globex opening range. It's been a steady down trickle ever since. This is now going opposite the market. The gold was moving with the market. The gold is now moving opposite the market today. It usually behaves like a risk asset, but not right now. We came into the low that was made first. We touched the low, and now we have bounced off of that. Pretty good. We're near the first support here at the S1. Gold volatility has been rather subdued in the last couple of weeks as well. This volatility used to be about 2.5 times what it is now. It's averaging about 8 points every 10-15 minutes. This was as high as 25 and 30 recently. So there are lots of inactivity and chop in gold and indexes lately. So we're basically functioning at about half of the regular volatility envelopes that we have been operating in, right? So we have very subdued activity in here, and given the fact that things are completely uncertain over there, that really is puzzling. I'm not too sure what the market is hoping for right here, but lots of things don't make sense lately, so I'm not going to try and figure out everything. I'm going to simply focus on the things that I can control and what is available for me to feed off of as far as information goes. Let's look at the daily chart of gold. Gold is in a similar holding pattern. It definitely experienced some volatility before. This was when it started to sell off, and it did break the support here that was in at 4,600, 4,500 temporarily. It bombed out near 4,100, reversed immediately, and it's been grinding ever since. We're coming back in to the 5,000 shelf where it fell from, so this is going to be some resistance going forward. This is not the greatest environment for day trading. That maybe a longer term position type of trading is warranted. Day trading has not been very good in here for some time now. We have one more to go over. Here's the crude. So here's the overnight action in crude. Here is the low. The low was put in right off the bat in Globex. We reversed out of that low, then we retraced to the opening price. Now we're having a little trouble with yesterday's opening range in NYMEX. This is orange boxes. The opening range in NYMEX is the first 5 minutes of trading. So this was resistance. This was resistance once again. This was resistance once again. And now we're going through the resistance here at 87.55. So crude is showing signs of a little bit of strength holding in this area. The upside target here is 88.40. With a little bit more volume and conviction, we should hit that quite easily. I have no idea what this is going to do for risk assets, but it looks like NASDAQ ran into some resistance here at the R1. It's trading back to the previous day's high. The picture is similar in the stock market. We have the market trading above yesterday's high with an attempt to move higher. It's already gone up so much, we're not sure if this is sustainable. It's the same picture in the ES. The ES hit the R1 at 71.80, is coming off. The gold is starting to move a little bit lower, bouncing off the previous day's low, so it's not in the same position, but it is, behaving, somewhat similarly. Hey, come here right now. Come. Hey, you be nice to your neighbors. You be nice. So that is the current setup for this morning. Gold a little bit weaker, coming off of support at the first low, and the S1 market strong, hit resistance, backing off a little bit. Crude was lower, now is moving a little bit higher. Let's check the gasoline chart real quick. Let's see. So the gasoline is a little bit stronger than the crude. So similar pattern. We made the low in Globex right off the bat. We came up off the low. It is kind of thin in here in overnight trading. It starts to thicken up during London. I put the London green line right here. So the gasoline was trading above the NYMEX opening range a little bit more, with a little bit more conviction than the crude oil was. And now we have this, big recent bar right here. So it's about 200 tick bar, and the gasoline is almost at the first resistance. So the gasoline is stronger than the crude oil. The crude oil is lagging a little bit. The gasoline is leading. So today's plan for me is going to be to run some scripts and work on some trading techniques and ideas. I'm not really too crazy about trading this market at the moment. The results are not that great. The news headlines can continue to contaminate the landscape, in my professional opinion, because I'm using quantitative analysis and machines to make trading decisions here. And when a news headline comes out or Trump signs into Truth Social with a update as to what's going to happen next, the market scrambles to reprice everything all at once. This makes systematic trading very difficult. There is opportunity in here, but this is a completely new animal with these news headlines. And this is also part of the reason why I'm doing these morning reports, and I'm going to be doing some other tutorials and lessons using large language models for data analysis and alpha generation, let's say, in trading. Where to find the edge. Like, how do I find an edge in this market? Where do I look? What do I do? What tools do I use? What techniques should I employ? What data am I looking at, right? So this is a little bit of a group project, hopefully, when I get some more people that are thinking more like me, and we can get together and attempt to figure out what's actually happening here. Conventional methods of trading and data collection are just not cutting it for me right now. I definitely need to find something that is more substantial, and I don't know if there really is a pattern. I mean, I don't know if you can quantify the activity on somebody's social media feed, or if you can really find a definable sequence of events in a news headline event driven market where things just seem to pop up randomly. They're not random, but they seem to pop up randomly, and then you have a reaction, and then you have an aftermath. So it's basically news headline release, market interruption, dramatic repricing, aftermath. News headline, market interruption, dramatic repricing, aftermath. This is just what's been happening in here over the last couple of months. So this is not going to change anytime soon. And this is what we are dealing with in the market on a daily basis now. So that will do it for this morning's report. Hopefully I will be able to catch some good script action like I did yesterday. Results were not that great, but performance was pretty good. I only had a couple of errors, and I did manage to catch a segment where the market did go crazy, and I did have no errors when the market activity really picked up. So that's a good sign as well. We will check in later on today. Until then, good luck out there, and I will talk to you soon.